everybody. Looks like technology's working just fine. How's everybody doing? Welcome. Happy Friday, everybody, to Stock Analysis Power Hour. I'm Jerry D'Ambrosio. Thank you, Thad. Appreciate that. Let us know where you're joining us from, guys. It is Friday afternoon, 2 p.m. It is September 26th. We've got a pretty nice day in the market today. By the way, today is going to be a little bit of abbreviated session. We're going to cut it short about 2:30, but we're going to get a lot packed in here in the next 30 minutes. I'm going to go over the market. It's always important that you or we establish a directional bias, right? Every day, are we buying stocks? Are we not buying stocks? Are we selling? Of course, selling has to do with the individual positions that you have. You bought something, you set a stop on it, didn't you? Right? Any stock that you buy, whether it's a short-term trade, a longer-term investment, it doesn't matter. There is a stop. There's an exit criteria, an exit plan in mind, right? So that is the selling part. But the other questions come, are should I buy stocks today? Well, the markets are up today, right? So we got a nice bounce back day after yesterday's sell-off. Dow up 348. Nasdaq up 77, S&P up 36 points, VVC up 46 cents a share. So nice bounce back day. I'll come back to the color guard in a moment, but here's what the VectorVest composite looks like. Here's a 6-month chart. Obviously we've been in a really strong uptrend. MTI above 1, hasn't crossed below 1, since it first crossed above 1 in May. So man, this is November already. I'm sorry, October. But the VVC, a little bit of a pullback. So, of course, markets don't go up in a straight line. A little bit of a pullback this week. Today's Friday, so we're looking at Tuesday really started the sell-off after a new intraday high there on September 23rd. Markets fell on Wednesday, sold off pretty sharply there yesterday, but we are bouncing back today. We'll get a little deeper into that in a moment, but just let's go back to the color guard. The key here is the primary wave being down. That simply means that the VectorVest composite, even though it's up today by 46 cents, it's still lower than it was a week ago. So the short-term trend of the market is down. The underlying trend of the market's still up. So how do you read that down up? Short-term downtrend within an underlying uptrend. Okay? We're still in a confirmed up. That's been months and months since we've signaled that confirmed up signal. Okay? MTI still above 1, although it's lower week over week. So that's kind of also part of this exercise, is not only determining what the primary wave is, because the primary wave is going to drive our guidance. If the primary wave is up, we are going to say in some form or fashion that it is okay to buy stocks. If the primary wave is down, we are going to say in some form or fashion that it's not okay to buy stocks. And that's what it says right now. VectorVest does not advocate buying any stocks at this time. I like how today is bouncing back, but at the very least, we're going to wait for a primary wave change, right? If the primary wave changes back to up, our guidance will change from it's not okay to buy to it is okay to buy. When could the primary wave change back to up? Well, let's see. Right now we're at 76.49. 5 days ago we're at 76.93. Well, it's got to go up another 50 cents today. Very unlikely. It's got to go higher than 77.12 on Monday. All right, doable, but still we could be looking at about 60 or 70 cents depending on where we close today. Then if we looked at Tuesday of next week, and of course Monday the market would have to move higher, another up day. One day doesn't make a trend, generally doesn't change a trend, but a couple in a series will change the direction or trend of the market. So 76.99 is what we'd be working off of on Tuesday, and that's more realistic if we can see some strength heading into the close today, and then another up day on Monday. So unlikely that the primary wave will change up on Monday, but likely it will change up on Tuesday if all things go the right way, right? And we continue to move higher from here. We've had some of these dips, right? We've had pullbacks along the way. Market's been very, very resilient. I have this 20-day moving average on. So there's other indicators, of course, that we could use. Okay. or look at, buy to sell ratio. BSR is still slightly above 1 at 1.12. Dipped below 1 there for a little bit. The overall strength of the market is still solid, but it's weakening. Less and less stocks, guys. We're just coming off of a brand new high. Less and less stocks are participating in this rally. The market is more focused and less broad. And that's kind of the interpretation when you see the buy to sell ratio. When you see the markets make a new high, but the buy to sell ratio kind of struggling and just hanging out a little bit above 1 when it was above 2 and 3 at the beginning of the rally, it just means that the market's a little bit more focused and less broad. And that's some pretty valuable information, I think. It helps us kind of manage our portfolio. If we look at RT, it's above 1, just barely at 1.01, and we talked about the MTI, kind of same thing here. MTI moving in the right direction, but still weakening on a lower on a week over week basis. Okay? Now, adding that 20-day moving average on, there's different ways to identify trend. Right? There's different trends. There's the short-term trend, there's the mid-term trend, there's the longer-term trend, right? Those are different types of trend analysis. The shorter-term perspective is looking at a simple 20-day moving average. You want to look at a 50-day moving average to get the intermediate-term trend of the market, you do that as well. Clearly, with us hitting a new 6-month high, you're going to have the price of the VVC above its 50-day simple moving average as well. The 20-day I think is key because it is more more recent support, right? Retest to the 20 here. Well, first off, retest to the 20 there, retest to the 20 here, retest to the 20 here. A little bit of a breakdown below the 20 at the end of July, early August, but then once it crossed above, it retested it once, retested it twice. Kind of call that a retest there on September 17th intraday, and the same thing we've seen now over the last week. Another retest of the 20-day moving average, and what seems to me today, another kind of push away from it, right? Another retest of it, another retracement off of it. So encouraging, but it's not going to change our guidance. That right there, guys, is just an added layer of analysis. Our guidance is going to be based on the primary wave. So if this is just a little hiccup, a little pullback within another otherwise strong underlying trend, then we'll see the market continue to move higher. And if it does, then the primary wave will change and our guidance will change. You guys with me? So right now, we'll look at a bunch of stocks. I'll go into the stock view, into the watch list. We'll build a watch list. We'll go through the same kind of stock analysis exercise because even though right now is more of a hold situation, not a buying situation, not a selling situation either, just a hold situation. Hey, I hold the positions in my portfolio. I remember what my stops are because I placed them when I took the position, whether it's, again, a longer-term investment or a shorter-term trade, you have an exit plan. When the primary wave turns up, we've anticipated when that could happen, maybe over the next couple of days. Then if you have open spots in your portfolio, you want to fill them, this exercise is required now, right? So it's just basically, basic stock analysis, building a watch list of stocks that you want to consider, and then choosing the best ones from that list. But have that list prepared so that when the time comes to buy, you're not going through this exercise and wasting time. You've already done that, done kind of your homework, right? So I'm going to go into viewers. We'll go into the watch list viewer. I'll just use this watch list. This is my account. Been with VectorVest 20 years. Look at how many watch lists I have in the My Watch List folder. And you know what? I cleaned it up. I had a lot more. You want to see some searches? I go into my long searches here. Those are all searches, different modifications of searches that I've created over the years. You'd think I'd clean that up, but that's what happens, guys, when you use this program a lot. You find different ways to find stocks. Just the scanning tool is so powerful. You just continue to find ways to use it. So I'm going to go my watch list. I'm going to create a new watch list. Stock analysis power hour. I'm an abbreviator. I'm going to go 9. I'm going to put the date on it. I always like to put the date on a watch list because then I can always go back. Stock analysis power hour, by the way. I can always go back and see what the stocks, what VectorVest had to say about the stocks on the day that I created the watch list. All right, guys. So let's get to it. Let's start typing in some symbols. Thank you, Troy. First come, first serve. I'm gonna maybe go 10 or 15 here, guys. So I'm gonna take the first 10 or 15. LABU, that's an ETF. Okay, not gonna have much analysis other than RT. Same thing with SQQQ. And we'll know the ETFs from the stocks because did I get them all? CRM. I think I missed CRM. MOS. I missed MOS too. No, I didn't. Okay. All right. Last one. All right. Last one. UAMY and Prim. All right. Pencils down. All right, we got 14 stocks. I was close, getting close to 15. All right, 14 stocks. Let me give it some more real estate. Let me right-click. Let me auto-fit the columns. Where's my price to value? Let me put... This is fine. All right, automatically, we know when you create a watch list, the watch list is sorted by VST. The stocks with the best combination of value, safety, and timing are going to be at the top of the list. Okay? They're likely going to have buy ratings as well. You can see, actually, it's sorted by VST, but it might as well be sorted by rating, recommendation, because all the buys are at the top, then the 5 holds, and then the 1 sell at the bottom. Micron Technologies, it is undervalued. Price of 157, value of 245. It has tremendous long-term upside potential. RV at 1.76. It's a safe stock, 1.35 RS, so the fundamentals are really strong here. RT, its stock is in an uptrend. Now, one thing that I would want to see with a 1.57 RT, I'd look at the chart and I'd see if the RT was falling from 1.9 or 1.8, or has it been rising from, let's say, 1.2. You don't know that by looking at the numbers, so that's when you look at the chart. VST good, right? It's sorted by VST, so best one in the list. CI above 1, I like that. I love comfort index, really important indicator in everything that I do. Making sure the CI is above 1. Really strong earnings growth rate, earnings per share of 12.40. You can get into some other data here, guys. You know, look at if it pays a dividend or not. It pays a very small dividend compared to the price. And then you get into some volume information, sales growth. I don't look at sales and sales growth all that much. I'm looking at earnings and earnings growth. Those are the two indicators fundamental indicators here that I would really favor more so than sales and sales growth, but all important. Then you got Prim, also a little bit. I'd say that's fully valued. Is it fully or is it fairly valued? I get that mixed up sometimes. Value, it is fairly valued. The price is a little bit below the value by $4. By the way, if price is within 10% of its value, we will either say that it's fairly valued or fully valued. If price is lower than the value but within 10%, we will say that it's fairly valued. If price is above its value but within 10%, we'll say that it's fully valued. So it's fairly valued there. Still strong fundamentals, really strong uptrend, 1.78. Everything looks good across the board. That's going to be pretty close to the same for most of the stocks at the top of the list. Let's see. Intel, though, a little bit overvalued. Okay. People are paying a premium for it. Whether that's good or bad, I think the rest of this exercise comes into play. Does it have really strong long-term upside potential over the next 1 to 3 years? We don't think so. It's a relatively risky investment. It's got an RS of 0.87, but it's in a really strong uptrend right now. That at 1.97, that's what's really kicking that VST score higher at 1.36. I don't like the CI on it. I don't like the earnings growth rate on it. It's got a buy rating because it's in such a strong uptrend. Let's take a look at this chart here real quick. All right, there's your strong uptrend. Let's look at the last year. I'm going to just take off, I got my MPI layout on. Let's put earnings per share on. Let's put on our stop price. Let's put on our T. Take this line off. So up until recently, and the stock is on a tear. I know there's been some news here. What was the news? It was Nvidia news, wasn't it? Was this just earnings? Nope. Whoops. I think it was Nvidia news. Nope, that wasn't even earnings. Before this recent move, look at this. Look at what this stock had been doing. My goodness. Let's look at a 5-year chart. All right, so good run from June of 22 to January of 24, and then kind of the bottom fell out here. We first gave it a sell rating right there on April 1st of 24. This is now a weekly chart, by the way. But the earnings per share has been steadily falling for years, guys. Years. It has maybe just starting to turn the corner a little bit. There was some news, Norman. I'm not quite sure what the news was. You can always Google it. I forgot what the news was. Looks like it has found the base here, though, right? So if you're just looking at things on a more technical perspective, looks like it's found the floor at about 18 and change. Going back to a 1-year chart, there it is, this zone right here. Very overextended. I wouldn't chase this. This is a kind of a dangerous stock because if the bottom falls out, you're in trouble. It's got a buy rating. I'd wait for kind of calmer price action before considering this one. But the numbers are telling a story here. Not a fundamentally strong company. Little risky. We saw the volatility. But it's in a really strong uptrend, more for a speculative trader at the moment, it being in such a strong trend. LABU is an ETF. It's a triple leverage biotech ETF. I know that just from knowing it, but I also know it because the RV and the RS indicators are at 1 and the price and value are the same. We don't value ETFs. We don't apply the same type of fundamental value and valuation to ETFs. It's really just RT. We're always going to let you know because it's an instrument, a tradable instrument, whether it's in an uptrend or a downtrend, right? So we know it's in a really strong uptrend here at 1.72. It doesn't have any growth or earnings information again because it's an ETF. Working our way down the list here, SQQQ. Of course, the NASDAQ has been on such a strong run that the inverse of the NASDAQ 100, the SQQQ, is going to be on, in a very strong downtrend. So if we look at the chart, there's nothing here that we're going to like. Below its stop price, RT is below 1, no earnings. We don't do earnings on ETFs, but man, look at that, right? So not something that, now listen, if the sell-off that we saw yesterday got worse and really just followed through today, if we continue to see selling pressure today, I think SQQQ might have been a good hedge play, a nice insurance play against long positions in your portfolio. If you're a more of an aggressive trader, if you're conservative, you're not even considering doing that. If you're managing your retirement portfolio, you're not even considering doing that. A little bit more aggressive trader might look to take a hedge position when the market appears to roll over, right? Take it off quickly if the market changes direction. But we didn't see follow through today from yesterday's sell-off, okay? And haven't really seen much of downside at all here. You know, you just tell by the colors of the candles over the last 6 months. A lot of greens, not many red candles. All right, go back to our watch list. Let's work our way from the bottom up because, I'm not going to analyze these stocks, guys, as if I'm giving you advice on what to do with them if you own them. This is an exercise in analysis just in general. And when you build a watch list of your stocks, where is the watch list average? I wanted to see the watch list average at the bottom. There we go. If this is your portfolio, right? You entered in all stocks in your portfolio. Every stock that you own in your portfolios, you put them all in there. And you know they're sorted by VST, so you're going to like the ones at the top. You're not going to like the ones at the bottom so much. This is a good exercise for someone that's really new to VectorVest that's saying, okay, let's see what they're all about. Let me put my stocks in a watch list, and then see what the VectorVest has to say about them. So we like the ones at the top based on their you know uh, relative value, relative safety, relative timing, VST scores, and we don't like the ones at the bottom. So let's look at VRT. It is overvalued. It's got an RV a little bit above 1 at 1.19. It has an RS a little bit below 1 at 0.99. So fundamentals are you know, uh, kind of average, I would say. Maybe a little bit above average, but more so average than anything else. But the RT indicator is at 0.97. Now, is that number rising from, let's say, 0.6, or is it falling from a higher value? So you look at the chart there, and it is falling from a higher value. Recently, it was at 1.29. Wow, look at this triple top almost potentially here. Right, 154. You got a touch there. You got a touch there. You got another retest there. So a double top, triple top potentially. But you can see the retracement off of that level. It's falling now. It is still above our stop price, so it's going to be either a buy or a hold. It's a hold. It's not a buy. Right? It's a hold, not a buy. If you were looking at this this position with the objective of holding it for a long period of time, there might be better candidates, but it's currently just a hold rating. Let's look at the earnings per share pattern too. Not bad. So earnings per share getting better. $4.17. Really love that. What's the earnings growth? 27%. Not bad. A little bit overvalued right now, and the trend isn't very strong either at 0.98. The strongly trending stocks, the ones that you don't have to worry so much about, are going to be at the top of the list. It's these at the bottom here that you'd want to consider. Let's take CRS. Let's see, that is fully valued, right? Only $7. That's definitely 10%, within 10% of the value. It's fully valued. I love the fundamentals here. 1.51 on RV, 1.4 on RS, but it's got a 0.90 RT. Is it rising from a lower level? Is it falling from a higher level? You look at the chart. It looks to me like it's rising a little bit. Nice. There's your earnings per share. Fantastic pattern. Let's clean up this chart a little bit. The stock is currently a hold, right? So, there's your pullback. We first gave it a buy there at 190. It reached a high of 290. It has now pulled back. It's kissing that 13-week moving average, but it looks like it's holding steady there. Never crossed below our stop price, so we never gave it a sell, but it's currently still a hold at the moment. So if you're in any of these guys, you're holding the holds. You're not buying the buys, or you're not adding to your positions yet. Why? You're not adding to your positions yet because right now, even with a nice update today, our guidance is do not buy stocks, and that's because the primary trend is down. But this exercise was good because it just allows you to very easily put stocks in a list and then see which ones are good and which ones are bad in the simplest of terms. Right? If I want to know which stocks are in the strongest uptrends, then I can also sort by RT. And the ones at the bottom of the list is really where you want to stay away from if this is a list that you are just building to track stocks or just see in general what the ratings are. So you sort by VST, you sort by RT. Man, the ones at the top, great. Ones at the bottom, that's where your work is needed. And then also, I think the watch list average is good too. I think the watch list average is good if all of the stocks here were in a portfolio. If this was just an exercise and, hey, let me throw in just a bunch of stocks and then just see quickly which ones gravitate towards the top, which ones gravitate towards the bottom, and it's not truly your portfolio, then maybe the watch list average isn't as important. But if this is your portfolio and you are, let's say, a prudent investor where you are looking for both price appreciation potential and safety, overall, this is a pretty good list of stocks, because if we look at the average at the bottom, your RV is at 1.22, your RS is at 1.11. If you guys remember from Vegas, if you were able to watch the live stream or attend, of course, live, you remember Steve talked about the investment matrix and the different types of investors that we've classified, and the levels of RV and RS that are required. So a prudent investor is looking for the best of both worlds. They want good upside potential, but they also want safety. A aggressive trader wants the upside potential, but they're not so concerned with safety. So if this was, let's say, a swing trader's portfolio, the safety rating might be a little bit too high. I'm not saying that's such a terrible thing, because you could still make money on swing trading safe stocks. But if you want stocks that are a little bit more volatile and have the ability to move up and down in price quickly, then the higher the safety rating, more unlikely that is. So that's just what an aggressive trader looks for. If you're a conservative investor, you want a high safety rating, probably higher than 1.11. You don't really care about RV all that much. I mean, we all like price appreciation, but a conservative investor, truly a conservative investor, is really favoring safety. So that RS would have to probably be a little higher. But if you're a prudent, you're okay with this list of stocks. Okay. But again, your management is done upon taking the investment, upon buying the stocks. RT, this is an important average as well, right? So is your portfolio in an uptrend or a downtrend? If I right click on that and go to view watch list average, there's the average price of the portfolio. So as a basket of stocks, really good performing basket, and that includes SQQQ, that includes all of them. So not bad. Last couple of days, all right, the overall portfolio was pulled back a little bit, but a really strong portfolio performance here if, again, these were the stocks in that portfolio. So right click there again, go to view watch list average graph, and it just averages out the entire list, puts it in a graph, that way. So VST above 1. CI, I like to be a little higher, but it's above 1 at 1.09. Average earnings growth rate of 19%, average earnings per share $4.40, earnings yield 3%. It pays a dividend overall, so this is kind of what your average dividend is, not much, 0.38. Dividend yield, YSG, dividend yield, dividend safety, dividend growth 0.70. That's below 1. Not again, that includes look, it includes all the stocks that don't pay a dividend, right? So not a great apples to apples comparison. All right, so very easy, guys. Put your stocks in a watch list, look at the watch list average, sort by RT. The ones at the top are making you money, the ones at the bottom are losing you money. Work your way from the bottom up and start trimming the fat and trimming the weak positions, and then replace them when our guidance changes. And we talked about that at the beginning. When that potentially can change, that can change maybe Monday, most likely Tuesday. VVC would have to go above 77.11, 77.12 on Monday. We're at 76.49, so we're talking 60 cents. Not impossible, but we're close to 0.8% there. But then it will likely turn up on Tuesday of next week. Could get a green light in the price column of the color guard on Tuesday as well. All right. So little pullback. If this is truly just a pullback, then the direction will change rather quickly, and the primary wave will turn up, and that's when we'll change gears, and our guidance will change. You're welcome, Bill. All right, guys. Have a great rest of your day. Have a great weekend. See everybody again next Friday. Don't forget, timing the market today at 3:55 p.m. Eastern Time. Kind of wrapping up the week. Take care, everybody. We'll see everybody next week.